Yeah, I think we should anticipate even lower prices for technology stocks. You mentioned as well in introduction, for example, the German DAX. In the German DAX, for example, I think we could maybe decline another maybe 5%. If we look at something like the Nasdaq 100 specifically, I think we could maybe go down to the same levels we saw in the beginning of April, or the highs of April. So that would be another maybe 2.5%, maybe 3%. In worst case, if everybody gets some really strong panic, we might maybe lose another 6% or something like that. And then we will be around the levels from May. Now, the market is correct to be fearful. Like, we have crude oil gaining, we have gas prices increasing sharply in Europe, and that's going to influence inflation, it's going to influence growth, and that's going to weaken stocks. But all of this will eventually pass. So ultimately, I think we can go down in the short term, but then later, especially if we have those another say 5% decline in the Nasdaq 100, I think that would be a really good opportunity to start to be bullish again and look to buy with the anticipation that all these problems will moderate. Yeah, definitely. I mean, real yields are negative, right? So yields are also low. That's what we need to remember, right? Because inflation has increased really sharply and yields have increased as well. But again, the real yield, which is what's the important thing, that has not changed that much. But it's more about relative positioning. You have real yields being very low, and then you have stock markets being very high. So from a stock market's investor's perspective, we need to say, okay, so will the real yield continue to be this low? And if that's what they don't think is happening now, they think it's going to go up. So when that goes up, the other one comes down. But then when things do calm down, right? In a couple of months, when winter is over, when electricity prices and energy prices are a bit lower, when some of the bottlenecks that we're experiencing right now, when those have eased, then people are going to say, you know what, it's not such a bad environment to invest. And we're moving towards those levels. So there's going to be a situation where I think where the Nasdaq 100 has dropped too much versus the economic reality. And that, as I said in the beginning, maybe let the Nasdaq decline another 5% at most. And then it's time to take a serious look and ask ourselves, like, maybe this is a very good time to look to buy again. Yeah, between 14,000 and 13,600. Those are the levels I would look to buy. The alternative, say something happens and we start to go up. If we trade above the October high of 14,848, then that could also terminate the negative sentiment. But right now it looks we can go down to 14,000, and the German DAX as well looks we can go down quite a bit. And it's because the high energy prices, it's because high inflation, it's because of the bottlenecks. And then you have central banks raising interest rates. You have the New Zealand Central Bank raising interest rates. You have the Norwegian one as well. We have the Federal Reserve doing the quantitative easing, reducing that. And maybe also in the Bank of England, maybe looking to raise interest rates at one point. So, yeah.